Good evening and welcome to tonight's special report on the world of cryptocurrency. Over the past decade, a digital revolution has emerged and reshaped the way we think about money. Traditional currencies like the dollar or euro have long dominated the global economy, but now digital currencies like Bitcoin and Ethereum are challenging this established financial system. While the rise of cryptocurrency has sparked significant interest, it all began as a niche technology, initially unrecognized by most people. So what exactly is cryptocurrency and how did it come to be? It all started in 2009 when Bitcoin was introduced by an anonymous figure or group known as Satoshi Nakamoto. The launch of Bitcoin marked the birth of cryptocurrency. What made Bitcoin revolutionary wasn't just the coin itself, but the technology behind it, blockchain. Blockchain is a centralized digital ledger that records transactions securely and transparently without the need for intermediaries like banks or financial institutions. This innovation allows for peer-to-peer transactions, which makes Bitcoin and other cryptocurrencies unique compared to traditional money. In the early days, Bitcoin's value was relatively modest. In fact, in 2009, you could purchase one Bitcoin for as little as $13, despite its initial low value and limited recognition. Bitcoin's blockchain technology began to attract the attention of tech enthusiasts and digital cryptocurrencies advocates. Bitcoin's fundamental promise was simple: to create a form of money that is independent of governments, banks, or other centralized authorities. It provided a way for individuals to transfer value globally without relying on traditional financial systems. Bitcoin's success inspired the creation of other digital currencies. Among the most notable is Ethereum, introduced in 2015 by Vitalik Buterin. While Bitcoin primarily focused on creating a decentralized payment system, Ethereum expanded the scope of blockchain technology by introducing the concept of smart contracts. These are self-executing contracts with terms of agreement written directly into lines of code. The introduction of smart contracts enables a wide range of decentralized applications known as dApps to run on Ethereum blockchain, allowing people to create not just a digital currency, but an entire decentralized ecosystem of financial and social applications.
Thank you, Drake, for that detailed look at the origins and background of cryptocurrency. As we now move into the present day, the world of digital currency has expanded rapidly, and with it, some truly groundbreaking trends and developments. In tonight's follow-up report, we'll dive into the latest shifts within the crypto space, examining how it has grown from a niche technology to an essential part of the global economy. First, let's talk about institutional adoption, where cryptocurrency was once considered a speculative asset for tech enthusiasts. It's now catching the attention of major institutional players. Companies like Tesla, Square, and MicroStrategy are making headlines for adding Bitcoin to their balance sheets. In fact, in 2021, the total value of Bitcoin held by publicly traded companies exceeded $6 billion. This growing interest from Wall Street not only lends legitimacy to Bitcoin and other digital currencies, but is also driving their acceptance as stores of value, similar to traditional assets like gold. These shifts have also sparked a new trend: the rise of central bank digital currencies, also known as CBDCs. While decentralized cryptocurrencies like Bitcoin operate outside of government control, CBDCs are the digital versions of national currencies. Countries like China are already testing the digital yuan with plans for border rollout. Unlike Bitcoin, CBDCs are fully government-backed, providing nations with new tools to manage their monetary systems. As more countries explore the creation of their own digital currencies, the global financial landscape could see significant changes, including faster and cheaper cross-border payments and greater financial inclusion. Next, let's talk about DeFi, or decentralized finance, which has quickly become a dominant trend in the crypto world. DeFi aims to replicate traditional financial services such as lending, borrowing, and trading on blockchain platforms without the need for intermediaries like banks. Platforms such as Uniswap and Aave have emerged, allowing users to earn interest on their crypto holdings or take out loans without involving a central authority. The DeFi space has grown exponentially, with its total value locked reaching over $100 billion by 2023. While this sector has the potential to democratize finance, it is not without its challenges, including the risk of security breaches and the need for clearer regulation. Another hot topic in crypto is non-fungible tokens, also known as NFTs. What started as a trend in digital art has now evolved into a multi-billion-dollar industry. NFTs, which are unique digital assets representing ownership of a specific item or piece of content, are gaining traction in the realms of art, music, gaming, and even real estate. Celebrities and artists are embracing NFTs as a new way to monetize their work. In virtual worlds like Decentraland are allowing users to buy, sell, and trade virtual property. However, NFTs have raised concerns about their environmental impact, as the process of minting them can be energy intensive and the market remains highly speculative. Lastly, with the rapid expansion of the cryptocurrency market, regulation has become a hot button issue. Governments around the world are racing to establish clear rules for how digital currency should be treated. In the United States, both the SEC and CFTC have indicated that they plan to increase oversight of crypto markets. Regulators are aiming to strike a balance between protecting investors and not stifling innovation. The challenge will be creating rules that address concerns like fraud, market manipulation, and money laundering while still allowing the crypto industry to thrive. As you can see, the crypto space has grown far beyond its humble beginnings. Whether it's the entry of big institutions, the rise of decentralized finance, or the booming NFT market, cryptocurrency is rapidly transforming the financial world. But with all these advancements, the space is still young and evolving. It's clear that the future of cryptocurrency is full of potential. There are still significant hurdles to overcome, especially when it comes to regulation and security. Now we have Jack Tilton on the field. How's it going, Jack?
Joining us today is Nolan, a Bitcoin trader with over 10 years of experience navigating the highs and lows of some bizarre twists of the cryptocurrency market. Nolan, it's great to have you here.
Thanks, Jack. Always happy to chat about the wild world of Bitcoin, though I hope I didn't just jinx myself.
No guarantees there. Let's see the basics. Bitcoin's price has been swinging like a pendulum lately. How do you manage tending in such a chaotic market?
Great question. To be honest, chaos is part of the appeal for a lot of traders. For me, it's about strategy and mindset. I break my trading down into 3 core elements: data, discipline, and perspective. Data is king. I'm constantly analyzing charts, volume, and market sentiment. Discipline means sticking to my plan, even when the market tempts me to do something reckless. And perspective, that's reminding myself that Bitcoin can drop 20% in one day and still end the year up 300%. It's a marathon, not a sprint.
That's a great mindset. But for some new Bitcoin, isn't the volatility terrifying?
Oh, absolutely. When I started, I used to check my prices every 5 minutes. My phone battery couldn't keep up. But over time, you realize that volatility is just Bitcoin being Bitcoin. It's like a hyperactive toddler. It's exhausting, but it has potential. For beginners, I always suggest starting small. Don't mortgage your house or sell your car for Bitcoin, no matter how tempting the hype gets. Learn the ropes first. And most importantly, don't invest more than you can afford to lose. If you're sweating bullets every time the price drops, you've probably gone too deep.
Wise words. Let's talk about regulations. Governments seem to be all over the place when it comes to crypto. How does that affect your trading?
Regulations are the soap opera of the crypto world. One country bans Bitcoin and prices tank. Then another announces they're adopting it and suddenly it's moon time. It's exhausting but predictable in its own way. As a trader, I try to anticipate the impact of regulatory news. For example, when the US started talking about stricter crypto tax laws, I adjusted my portfolio to reduce risk in the short term. At the same time, I keep an eye on regions like Latin America and parts of Asia, where adoption is growing rapidly. Regulatory chaos in one place often means opportunity elsewhere.
Interesting. Now, a big question. Do you see Bitcoin as a future of money, or is it just a speculative bubble?
That's the $1 million or Bitcoin question, isn't it? Personally, I think it's both. Bitcoin is revolutionary. It's decentralized, limited in supply, and operates independently of any government or central bank. That's huge. But right now, it's still evolving. For some people, it's a long-term store of value, like digital gold. For others, it's a speculative asset, like betting on a horse race where the horses are rocket-powered. I think over time, as adoption grows and the infrastructure improves, Bitcoin will become more stable and widely used. But for now, it's not for the faint of heart.
Fair enough. Before we wrap it up, what's your advice for someone watching this who's considering jumping into crypto trading?
First, understand that trading isn't for everyone. It's not just about making money, it's about managing risks, staying informed, and keeping your emotions in check. Start by learning the basics of Bitcoin and blockchain technology. Then practice with a demo account or invest in a small account you can afford to lose. Remember, this market can humble even the most experienced traders. Lastly, stay updated. The crypto world moves fast, and one tweet can change everything. So whether it's news, regulations, or market trends, keep learning. And whatever you do, don't let FOMO, fear of missing out, make decisions for you.
That's fantastic advice, Nolan. Thank you so much for sharing your insights.
Thanks, Jack. Always a pleasure. And hey, if Bitcoin hits a new all-time high tomorrow, let's do this again.
You got a deal. That's all for now. Market Hour. Stay tuned for more updates on the ever-changing world of finance and technology.
Thank you, Jack, for that insightful conversation for sharing their perspective on the highs and lows of navigating the crypto market. As we've seen throughout tonight's report, cryptocurrency is far more than a passing trend. It's a dynamic force, reshaping how we think about money, technology, and even governance. From its humble beginnings from Bitcoin's launch in 2009 to the rise of decentralized finance, NFTs, and institutionalized adoption, cryptocurrency has proven to be a transformative, albeit unpredictable, innovation. However, with such rapid development come significant challenges, including regulation, market volatility, and environmental concerns. What's clear is that this is just the beginning. Whether Bitcoin becomes the future of money, or we see a world where central bank digital currencies dominate, one thing is certain: the evolution of cryptocurrency will continue to shape our financial systems, our industries, and even our daily lives. Thank you for joining us for this special report on cryptocurrency. On behalf of myself, Quinn, Jack, and the entire team, we appreciate you tuning in tonight. Stay with us as we continue to explore stories that impact our world. I'm Bratley, and this has been your evening news. Have a great night.